Google allows Jittery shares in advance of Fed Singapore better-than-expected consequences at Microsoft, Nasdaq, MSFT, and Google helped consistent a frightened mood in inventory markets on Wednesday, at the same time as bonds and the greenback have been on aspect ahead of a U.S. Federal Reserve meeting that is predicted to supply another large charge hike. Nasdaq 100 futures bounced 1.5% and S&P 500 futures have been up 0.9% in Asia after Microsoft forecast sturdy sales growth and Google determine Alphabet. Nasdaq, Google, posted stable search engine ad income. Alphabet stocks rose 5% after hours and Microsoft stocks rose 4% to reduce through a number of the gloom forged by using a earnings warning at store Walmart, NYSE, WMT, and soft U.S. monetary facts. European futures rose 0.2% and FTSE futures rose 0.3%. Japan's Nikkei rose 0.4%. Things had been no longer as colorful elsewhere. MSCI's broadest index of Asia-Pacific shares outdoor Japan fell 0.7%. The International's second biggest chipmaker, SK Hynix, warned call for was probable to slow as customers cut spending, and stocks fell 1.9%. The euro struggled to recoup and in a single-day drop as a further cut in Russian fuel flows loomed. The International Monetary Fund has reduced worldwide increase forecasts and in a few hours buyers expect the Fed to elevate interest quotes sharply. They have laid out their plan to elevate rates to restrictive ranges, stated Kun Go, head of Asia research at ANZ Bank in Singapore. They want to keep away from a difficult landing, manifestly, but they just cannot take the danger of inflation staying expanded. The U.S. important bank is expected to announce a 75 basis factor (BPS) fee hike at 1800 GMT. Futures suggest approximately a 15% hazard of a 100 bits per second hike. The Treasury marketplace is already looking ahead to that so many sharp near-term hikes will hurt longer-run increase. Benchmark 10-year Treasury yields had been steady at 2.8032% on Wednesday, below two-year yields at 3.0508%. U.S. Australian bonds staged a comfort rally on Wednesday, after patron fee statistics surprised at the drawback for a change even though solely with the aid of a tiny margin prompting buyers to return out of bets on a 75 bits per second rate hike in Australia's subsequent week. The Australian greenback fell marginally to $0.6935. Three-year bond futures rose 11 ticks. AUD. Europe, China wobbly on top of issues about interest costs. Adverse economies. Europe faces an electricity disaster and China is beset by way of restrictive COVID-19 guidelines and clean setbacks for its in poor health property market. The euro had its worst session in a fortnight on Tuesday, sliding 1%, as Russia's Gazprom (GAZP) stated it might similarly cut westbound gas waft and power fees. Zoomed better with German year-ahead prices rising to a report. Ing EU LDA. The common foreign money steadied at $1.0150 in Asia. The Japanese yen held at 136.96 consistent with greenback. FRX. China's yuan changed into underneath stress and assets. Stocks fell as traders had been spooked that a widening boycott of loan payments on unfinished apartments and crippling debts at many developers should ricochet into the banking enterprise. The onshore CSI Real Property Index fell 2% and a Hong Kong index of mainland builders fell more than 5%, dragged down by means of massive developer Country Garden announcing a discounted share sale. China's housing area is within the midst of a melancholy and the recent mortgage boycott is an indication of the severity of the downturn, mentioned analysts at Société Générale (OTC), SCGLY. The volume of this boycott, as it smiles now, is not unmanageable, however there may be a threat of escalation. Oil expenditures held consistent, with Brent crude futures at $104.58 a barrel and U.S. crude futures up 0.3% to $95.32 a barrel. Gold changed into consistent at $1,717 an oz. GOL.